Hello everyone, welcome to Elliott Wave Forex.com YouTube channel. My name is Henry and today is Tuesday, July 20th and the time is around 2:30 a.m. GMT. Today we're going to be looking at the chart of the S&P 500 SPX 45 minutes chart here. We can see that this is the all-time high in the S&P 4,393 right here. We are calling that as a wave 3, right? Wave 3, and we're gonna take a look in a little bit later what that means. And so now we are within the wave 4. And within the wave 4, we are we are basically unfolding that pullback as a zigzag. We have this 1, 2, 3, 4, 5, ending 5 ways down here, ending A, and now should be looking for a 3 ways rally in a B, right? It's a 3 ways rally in a B before we turn lower again to complete the C leg in the intermediate degree in the blue color here. C leg on the downside, and once it completes the ABC in the intermediate degree, we should be ending with 4 as well in the primary degree here in the black color here. Okay, so that's what we're looking for. We're looking for the rally to fail now for further downside again. Now the rally it can go, I mean, it is in the B leg, so don't, this is just a, it is not meant to say the rally exactly is gonna, it's gonna end at this level. It is meant to say that the rally is going to be in 3 waves. So you need to keep in track. For example, if the A is this, then you will see the B like this, and then you can measure the C. This C leg should be more or less equal in length to the A leg. So it depends on the length of the A and also the B before you can get a better idea of where the 3 ways is going to end. Okay, so this is just to give you an idea that this is going to be in the form of 3 ways rally, and that 3 ways rally is going to end doesn't necessarily mean it will end exactly at this level here. Okay, but it should be in 3 waves, and that 3 waves, as long as we stay below this level here for 4,393, we should be looking for more downside. I mean, we have, for example, a chance to close the gap here around 4,323, let's say, before turning lower. It doesn't mean this is wrong. It just means that the rally is a little bit bigger, and as long as we stay below 4,393, we should be looking for the downside. Now let's zoom out a little bit and take a look at the larger degree. Now remember, we ended this with 3 right here in the primary degree here. So if we go to the daily chart now, so this is the wave 3 here, the all-time high in the S&P. This March 2020, as you know, is the COVID-19 low, right? This is the COVID-19 low when the first news came out that the world is infected by a new virus, and then everything is sold off here. Since then, we just continue to rally relentlessly. It's already more than a year and 4 months to be exact, this cycle right here, right? And now if you look at this structure here, we're calling this wave 3 here, which means that if you look at this structure coming up from the March 2020 low, it can be counted as a 3 swing so far, which means that we should be looking for a 4 and a 5 before we can potentially end this entire cycle and get the biggest pullback, right? We can get the biggest pullback at least to correct this entire rally, potentially after we get one more push on the upside, one more new high. Okay, so that's the idea. Now, like so if you want to know what exactly, so how big the sell-off can we expect, well, if you look at the 1-hour chart, the more precise way to know it is when you already have the P fully formed, then you can measure the C target on the downside, which is usually equal to the A. So in the equal area, 100%, 161.8% extension. So the more precise area is going to wait until you have the P fully formed, and then you can start measuring the potential target on the downside. But just as a rough idea, if you go to the daily chart, if this is true, if this is indeed only a wave 4, right, then that means potentially if you use retracement technique, it can it can go to as low as the 23.6, 38.2% retracement of the wave 3, right? So that will be 39.44, right? Potential target 39.44 to 4,119 approximately, just rough idea. That could be a potential target area to finish this current sell-off here. Then from there we have a chance to see one more last push on the upside to finish up 5 ways up from March 2020. So if we're talking about shorter cycle, then it's very easy, right? If you don't want to know anything about the larger time frame, then basically all it is saying is the rally should fail and go down again. That's simple as it is. If you just want to focus on the shorter cycle, we should get more sell-off. And if there is any rally, that rally is going to fail. And we should see more downside, potentially to reach at least 39.44, 4,119 at minimum. I mean, more or less. So if you just care about shorter cycle, then that's there is to it, right? That's it. That's the view in the shorter cycle. Now, if you care more about, okay, what happens next, then after that sell-off, because it looks like we still can call it like a 3 swing here from the March 2020, we cannot rule out one more push higher once the sell-off finish to finish this entire 5 ways up from the COVID-19 low. Now, as an alternate, I could move 3 here, and this is my 4, and this is my 5. Now, if I do it this way, what's going to happen is we are already finishing up this cycle. We finish this, right? We finish this. So if this is the case, then what's going to happen is we can get the biggest sell-off already, the biggest pullback to correct this 1 year, 4 months rally, right? So really in the alternate is either we are only wave 3 here, we're going to do wave 4 and the wave 5, or we finish the 5 ways up already and then already starting the biggest pullback. Now either way, whether this is the case or whether this is the case, if you look at the shorter cycle, it's simple. You're gonna get more sell-off, right? Either way, whether it is ending 3 here or 5 here, you're gonna get more sell-off as long as the rally fails below 43.93. So we're gonna take it step by step. We're gonna take a look at how big of a sell-off this is. Now let's say what will be the indication that this is actually 1, 2, 3, 4, 5 like this instead of 3 ending here. Well, one of the possible indication is if the rally turns out to be, if the sell-off turns out to be more pronounced, so it's not going to be ABC, it's going to be 1, 2, 3, 4, 5, right? Now in a 1, 2, 3, 4, 5, you can imagine here once we finish. Now, okay, so we finished this first leg supposedly, and we now rally a little bit. Think about it this way: if this already ended the entire 1 year, 4 months, this is going to be doing something like this. Instead of ABC like this and going up, instead of an ABC, this is going to be doing 1, 2, 3, 4, 5 like this, right? Will be a much bigger sell-off, and then you got a B, and then you got a C like this. So you're gonna get a much bigger sell-off to correct this, and then this decline here, instead of ABC, it will be 1, 2, and then will drop in wave 3, which is an extended move. Usually wave 3 is going to be 1.618, right? But for now, we are still calling for potentially one last push higher to finish up this cycle from March. So this is what we are calling. But it doesn't matter, like I said, whether your view is we're gonna have one more push higher, or whether your view is we have ended the wave 5. It doesn't matter. In the shorter cycle, we should see more sell-off as long as the rally fails below 43.93 right here. Okay, so that's the update that we have for today. As always, if you do want to get regular updates on S&P or other world indices, Forex, stocks, commodities, feel free to check our service. We have 14 days free trial. The link is provided in the description of the video. I'll see you all again tomorrow, and have a nice day to everyone.